All right, good morning, guys. Hope you guys had a great 3 day long weekend. It truly was an amazing one. Personally, I was on the screens, just kept doing a lot of research, reading some stuff, and so some levels that we have for today. And if you guys read the title, it clearly states rates plus geopolitical. All right, two things moving the markets right now is the rates, the hikes. When Fed speakers come on, they will speak something about the rates, right? 50 rates or 125, they keep changing their stance. And but let's see, in March we'll find out. And then we obviously have the geopolitical tensions between Ukraine and Russia. And over the weekend, you guys saw the futures were reacting a lot, right? They were up, they were down, and now we're close to not bad. I mean, still red, but they recovered a lot overnight. But one thing that you need to understand, the lows those futures hit over the weekend, is likely gonna happen that in regular trading hours as well. It may happen this week or next week or maybe even today. Who knows, right? And on SPX, before I go over the levels, just know this pattern, right? All of you guys should know this pattern. LB usually draws it. This little head and shoulders pattern, right? On a bigger time frame is sometimes usually more accurate. So just keep this in mind in case if it does work out, and if it plays out, then we're obviously likely going to go towards 3,800, 4,000 on SPX, right? And the levels today that we have for SPX, I'll just write them down here. To start from the lower side, we have 42.49. All right, then we have 42.82, and then obviously 4,300, 43.50. I think we're near 43.50ish right now, which will act as support and resistance. And then above this, we have 4,400, and then we got 44.30, 44.50, and all the way towards 4,500. The most important number here is the 4,400 number. Right, 4,400 will act as a very, very hard resistance. So let's say if SPX in the morning goes green and the market turns bullish, what you want to see is SPX at 4,400. Is it able to take out 4,400 or not? If it gets rejected, the market is likely going to give up some gains or go back red again. Or maybe the market stays red all day. I have no idea. But another thing that you want to pay attention on SPX daily chart is this MACD below the 0 point is crossing down. This is usually bearish, right? If you have experience in the markets, you follow the MACD indicator, and when the MACD crosses over and then it crosses down, the bearish signal to the downside below these levels, is even more bearish then. That means it's probably going to go around these levels, come here, reset, and then maybe try going back up. All right. So just keep these things in mind. And no need to rush at the open. If market does open red, like the tech names, the puts are probably going to be green. They will put some premium into the puts. All right. And if market goes green and the puts are still green, be careful with your entries on options. That I can tell you for sure. Then you're paying a lot of extra premium. All right. There may be increased volatility in the markets. Qs, same thing. Similar pattern as we know, right? Head and shoulders, a double top, and then a bear flag, right? Multiple patterns that you can spot on this name. And I think Qs, the best thing that can happen to the upside is go towards the 200 moving day average. But overall, a longer time frame, I'm still bearish on Qs, right? I play levels, day to day. Maybe I'll go bullish today, maybe bearish tomorrow. I have no idea. But this bear flag pattern is in the works, and so far they haven't been disappointing. All the bear flag patterns that happened in the market, whether it was weekly or daily on many names, they actually worked out. If you want any name, PayPal, Square, Roku, they all played out. All right, so any bear flag patterns forming, just watch out in this market. They're likely to work out. And Qs 340 will be really hard. 340s will be really hard. And at 350, I think Qs is a very good put play, and that it happened this on Friday, right? We almost reached 350, and it was a good put scalp. And even if you held, and it paid a lot, right? Qs right now, 340 will be the magnet level. Under 340, bearish. Above 340 hold, we might have a bounce in play, but 340 will act as support and resistance. Some tickers that we've got to go over. Home Depot, HD, they had earnings today. Another bear flag pattern here, right? Bear flag pattern, and now at the 200-day moving day average, and now it's under 200 MA, which is not good, right? We bounced in Jan on the 200-day moving day average. Last week we were trying to hold it, and now on earnings is down, right? That basically suggests so if I just zoom out of the chart, I can tell you right now the level that we're likely going to visit on HD. Just by looking at the chart, I can tell you that we're probably going to visit near 300 on Home Depot, which is another 25, 30 points down from these levels if the market stays weak. All right, and which will be a strong support. Why near 300? Because this was a breakout level from all these months resistances. It broke out, went up 100 something points, and now it's giving it up. Okay. And on Home Depot, they beat their earnings, they beat their revenue. They had a 15% dividend increase also, and the stock initially went up, but then they sold it off, right? So maybe their earnings call, something they said, I have no idea. Maybe supply chain disruptions. For Home Depot, if you're looking to play, I know a lot of guys in our group play this name. 300 is the longer term price target, and then here we're probably going to get rejected by the 200 MA, which will act as resistance now. All right. Tesla, draining. If you're listening, we nailed the Tesla strangles on Friday. We took our profit, we took our exit, right, and then we placed some spreads, which were also in profits, but I held on to them. Now Tesla kept bouncing off the 200-day moving day average right here, and if I compare this chart to Home Depot, it's pretty similar. They bounced from the 200 MA and now it's holding above the 200 MA. It's trying, but pre-market we're red. Tesla, if it holds under 850, is nothing but bearish. 850, under 850, hold is bearish. We see lower, all right? And if 800 breaks, then 700 is in play, all right? If 800 breaks, 700 is in play, and which is likely going to happen, right? And this chart also reminds me of Bitcoin. Is something similar. A lot of charts are looking like this with a triple or double top, and now they're just holding on to 200 moving day average. And on Tesla, if I go on the weekly, just for your reference, on the weekly, there's a nice little bear flag on the 50 MA. It's likely going to tag this level right here, this candle, which happens to be 650. All right, so 650, 700 zone if the market stays weak. If Tesla stays above 850, it recovers, then we can obviously have a strong support base here, and then we'll go up. But I personally believe in the coming weeks and months that we will tag somewhere around 700, 600 on Tesla. I think it's going to happen. It's the chart is telling us that it's going to happen. So be careful if you're long. All right, 850 is very critical on Tesla. Apple, what a beautiful play on Apple that we did. Right, I explained this play to many of you guys over and over in the chat. We did vertical bear call spreads. And okay, let's just spend 2 minutes on this so I can teach you guys something here. So we basically, what happened, Apple was trading near 170, I believe 169.90 or 170. Let's just say 170, right? Basically, I sold 170 calls, which gave me around $4 premium, and then I bought 175 calls for about $1.50. This gave me $2.50 credit. My max loss here would be 250 on the difference between 170 and 175. So it was a double play. So the ratio was 1-1. It was beautiful. But why is this play in our favor on a double? Right off the back, you're already getting $2.50 in intrinsic value in your favor. Right? If you don't understand this, you have to go to Greeks and understand what intrinsic value is. Even as long as Apple stays below 172.50, forget 170, right? You're selling Apple above 172.50. As long as it stays below 172.50 in the coming days, you're gonna make money on these spreads no matter what. Only worry will be if Apple holds above 172.50. But 170, a very hard resistance on the daily, is not been able to get through 170, and every day the premium is going to die. Most of the options in the options market go to zero. Remember that. When there's increased volatility in the market and you spot a double top pattern or something with a very tough resistance, and you're selling strikes above that resistance, and if you can get a 1-1 ratio in vertical bear call spread, there's nothing like it. I will probably take that trade every single time, right? Even one day it holds at the same levels, you make money on that trade, right? And today they'll be going for $1.20. I think I can recover, and that's $1.30 in profits. Right, this has a lot more details into it. Obviously, some of you guys probably didn't understand this, but Apple trading at 170, and I'm selling the spreads 170, 175 for 250. That's amazing. In a regular market, these spreads will probably go for $1.80 to $1.70, right? But with the increased IV, I was able to get more credit, and I took it right away. Okay, and then we have AXP. Okay, so AXP, another name, right? Potential. So let me just go on the daily chart. A very good chance I'm going to throw a play on this name before 12 o'clock today, right? If you follow us on Instagram, I also did mention it there, and I will likely do it. But obviously, I never force plays. If it's not there, I'm not going to do it. That's fine. But this is a very strong double top pattern. A lot of resistance above 195, 196 area. The stock broke out and now it's failing here. MACD is about to give us a little bearish signal. The volume has been decreasing, and as long as it holds below 195, this stock is probably going to visit 180s. All right, and the best way to play with this name, it now depends on the premium I can collect. If there's a reasonable premium that I can collect by doing vertical bear call spreads, I will do it. So my what I'm looking at is selling 196 calls and buying 200 calls. If I get $2 or around their credit, I will pull off the trigger with 2 to 3 weeks out. So if I get $2 credit by selling 196 calls and buying 200 calls, and I'm getting a $2 plus credit, 2 to 3 weeks out, I'm gonna pull the trigger on this name, and every day then this name will just go up. It will be a very likely trade. It's a very picky trade in my opinion. All right. So pay attention to this. If you do vertical bear call spreads, I'm gonna see in the morning if I can get some good credit. As long as that happens, I'm gonna pull the trigger on this. And if you haven't read the newsletter, I highly suggest that you do. You have some time before pre-market, or maybe even doing that for a first half an hour. A lot of good information posted by Dr. Love in that newsletter. All right, so make sure you guys read it. It will clear your head. You will be ahead of the market. MasterCard already showing us some weakness, right? Right here. And then I think if MasterCard also breaks down along with Visa, then AXP is likely to follow this time, right? Because AXP is making a copy pattern, so keep an eye on that name. XLF, the financial sector. I think Oscar, you were talking about this name. It's another failed breakout. This chart is very similar to which chart? As soon as you look at a chart, you should know this chart right away. I'm gonna pull a pattern here, and I'm gonna pull up Amazon weekly chart. Now I'm on the XLF daily chart, but the structure is the same, right? I mean, the idea that I'm gonna go over, right? Do you guys spot similarities here? Right, this chart looks pretty much the same, right? Forget it's daily or weekly, but XLF looks pretty much the same as Amazon here. All right, so right here, and if this pattern works out the same way, then what did Amazon do? It broke down after. XLF can happen the same thing on this pattern. It can break below 38 and visit 36 or 35 all the way towards here, right? With all these tensions going around the world, with a lot of things coming out, there's a good possibility that it breaks down. All right, so just keep an eye on this name, but if it gets 40 plus hold, then that's strong. All right, so as long as XLF holds under 40, the bearish pattern is forming, is probably going to go down. We nailed the bank puts, and now we see what happens next. And always scale out your profits, guys. You know, don't hold your calls for too long. Even if you start banking 30-40% profits, your accounts can grow up by a lot. XLE Energy has been strong, right? Some news about Russia stopping their supply to Europe, right? And then Saudi, I think Qatar, whatever country that was, they said they will not be able to supply you know, natural gas to Europe on its own. But need to look more into this news. But energy can probably still see much higher. If energy goes higher, then that's not good for the market. Will it hold S&P? It'll help S&P hold certain levels, yes. But overall, I don't think that will be a good thing for the market then. Right? Then recession is likely in play. Oil prices are going to go up. A lot of things are going to happen, and we'll see how those things come along the line in the coming weeks. Right? XOM, I'm just going to go over it quickly. Right, this could be a bull flag pattern also, guys. I know we're seeing a bearish pattern here, but this can also be known as a bull flag pattern. If you look at this pattern right here, right, this could be a very nice bull flag pattern if it breaks to the upside. So keep in mind, if it continues 79 and takes out $80 and it holds above 80, then we're probably going to go higher. Unless it goes above 80 and then comes down in the coming days, then it could be a potential double top, and then we can play down on energy. But I think we're going to need some news from Russia or Ukraine for these stocks to move in a certain direction. Amazon broke down. This is two ways to look at this chart, right? One is from this toppy pattern, you can draw a little flag, and then you can on the daily can also draw bull flag. But then there's a huge gap up here, from the earnings. But it's right now getting rejected at the 50 MA at the top. And the only thing I can tell you is under 3100, Amazon is not good. MACD is about to cross down below the 0-point line, which is not good, it's bearish. And if tech gives up gains, if anything like that happens, this is a short in my opinion. Bucky, great job on puts. Though that day on Friday, you guys played a couple of times, nailed it. If we go green today and Amazon goes red, once it goes green and goes red, I'm probably going to buy some spreads to a downside on Amazon in case the market does flush them. All right. And Caterpillar, I think it was holding green in the market, but I'll just go over the weekly chart on this name. And the weekly broke down. This is not good. This chart right here, this is a failed breakout attempt. This is a bear flag that pretty much broke out on the weekly. 190, 200 is a level. If it holds under 200, continues holding under 200, I think we visit the 200 MA in the coming weeks. But under 190 is very bad. Under 190, I think we have 184, and then all the way towards 167, 170 on CAT, right? This could be a potential double top pattern on CAT, all right? Before it was running, it was because of the infrastructure bill. I haven't heard any news regarding that lately, but I would probably avoid Caterpillar until we see a nice little reversal. Because if the market really dumps in the coming days or into March FOMC, then a lot of stuff is not going to be good. March 15 and 16 are the dates. And thank you guys for attending. DWAC, keep an eye on it. DWSC, $100 will be tough, right? But this is the only stock I see closest to a GME type squeeze that's possible on this name. And I'm not saying it's going to happen, but the chart is just so similar to this. If we go on the daily, when GME squeeze, it's just so similar, right? If you guys look at this chart pattern, above 100, if it holds, this name can get legs towards 120, 140, 150. And like Platinum Stacks said, under $100 is not good. 97.50 is the level. Underneath 97.50, be careful. Above 97.50, it can continue seeing strength. You want to see the highs of February 7th hold, all right, on DWAC. Thank you, manage well. We'll see you guys in the voice chat. We trade live every day on voice chat, as you know, so we'll see you guys there.